Good morning to all traders and welcome to another daily market science video. Today is Monday, the 15th of July, and indeed a very interesting week. Investors have waited for this week for a quarter now. It is the corporate earnings week, and we start with the most major banks actually reporting on their earnings for the previous quarter. Expectations are a little bit looking on the downside compared to the previous quarter, and that is why it's a very interesting week. Are we going to see equities moving higher despite the earnings reports results, or are we going to see them following lower? Now, the thing is that investors have been pushing stocks up, that have been buying, and that is because there is speculation that the Fed will cut maybe even more than once. How deep are they going to cut? At the end of this month, of course, and then following the next FOMC meeting, I think, if not mistaken, is in September, so closer to the other quarter. So on the calendar front this week, we're not expecting much. We have some the retail sales data from different countries, and also I would say the most important ones would be the inflation figures that coming from the UK, the US, New Zealand, and also the RBA minutes. Very good and interesting week indeed, but mainly on the equities front, because this is what is going to drive markets, okay, the forex markets and the currency markets as well. I want to start today with the daily for the index. Now, in the long term, we've ended an impulse wave up here, and we are still looking at a correction down to wherever that takes us, okay? Now, we ended wave B around the 61.8 retracement of this impulse, yes, the first actually wave was an impulse, the first A wave, 50 Fibonacci, and we broke the correction, actually ABC over here, right? Now we broke below that level, okay, and retested. Now, how I see this is I see this as an ABC, right? Now, following this, okay, we can expect an impulse wave, because this impulse, which has a correction as an ABC over here, okay, it looks to me like it's an expanding flat. And why do I say this? Because the wave A, okay, the 38.2 Fibonacci extension of wave A is exactly where wave B ended, okay? So we have an ABC, right? And we are expecting, normally this is how it works, right? We have, let me just delete that. So we have A, B, C over here, right? And now we can expect another impulse move to the downside, and that would most likely go closer to the wave A end, 93.80, and even lower. Now, down on the 4-hour chart, how I see this happening, it looks like from the top up here, okay, we started moving low, we broke below that level, and now it looks like we are impulsively correcting with something like an open triangle, okay, pattern, and most likely looking at wave 3 to end around 93 or so, or even down here, and then wave 5 to either come truncated and end around that level or move lower. And down on the 1 hour, as you know, we are in some sort of triangle pattern. We should be moving in ABCs, and we did indeed move on an ABC in the first time. Now, second wave, probably looking at ABC over here, and wave 2 would probably come over there or something like that, because the thing is that this move is impulsive, okay, quite impulsive, so that can only be an A with a B down here and a C ending probably around that level. All right, now if we break above here, we could be looking at invalidation above 97.56. If that happens, we'll break above that, and probably most likely going back above 99, okay? We have some short-term signals that support the bulls, That might be the case. And again, if that doesn't happen, we want to see prices start correcting here for another ABC wave that is going to meet this trend line down here, okay? If that doesn't happen, it will break above that, most likely looking to have this invalidated as a whole. Now, the S&P, again, looking at the very big impulse wave to the upside, and I'm looking this again as an expanding with wave A, wave B, and wave C, wherever that takes us. Now, the wave A Fibonacci extension of 38.2, which is where the expanding wave B is expected to finish, is around 3200s, okay? And that B wave is also a combination, a double combo, which within this level, last wave C, I see a few more waves actually coming in. Now, down on the 4-hour chart, we finished wave X and we're looking at wave Y. That can be an impulsive move, and I see this as an ABC with 1, 2, 3, 4, 5 coming in quite shortly. Wave C is probably expected to end around 3100s. Then we should see a correction around 3070, 3050 or so, and another wave 5 to the upside. And from there, we start looking for the sells. And down on the 1 hour, there isn't much more to say. We're just moving in an impulse. Okay, we ended here, and then wave B ended around the 2900s. Now from here, the extension of this wave comes to around 2980, which has already been broken. And then the extension 1 comes to around 3050. So this is where I'm expecting wave 3 to end, okay? Then prices should correct a little lower and then move all the way up to validate the expanding wave B above 3077. So this is all for the day. A very, very interesting week for the equities. So I would pay attention to what's happening with the S&P and what, of course, the banks are reporting. I want to thank you for watching. And I want to remind you to always visit our blog, is where we cover the latest ideas, provide you all the necessary tools you need to trade successfully.